Launching 20 private satellite constellations by 2025, a phased approach with $500 million investment across R&D, manufacturing and deployment. Date, February 9, 2025. Location, various global sites. Key players, AST SpaceMobile, Vodafone, AT&T, Rakuten, American Tower, NASA, FCC. Private investors. Introduction. The ambitious project to launch 20 private satellite constellations by 2025 aims to address the global digital divide, particularly focusing on the 3.2 billion people currently lacking internet access. This initiative is led by AST SpaceMobile, which seeks to transform standard smartphones into satellite phones, enabling connectivity through a network of satellites functioning as cell towers in orbit. Investment overview. The investment landscape for space ventures has evolved dramatically, particularly within the North American space sector. Venture capital funding surged to approximately $12 to $15 billion in 2021, driven by reduced launch costs and increased demand for satellite-based services. AST SpaceMobile has secured an initial investment of $500 million aimed at bolstering research and development, manufacturing, and deployment strategies. Phased approach. The launch strategy is divided into multiple phases. 1. Phase 1. The initial phase involves deploying 20 satellites to cover equatorial regions, expected to provide connectivity to 1.6 billion people by 2024. The operational model includes revenue-sharing agreements with established mobile network operators, MNOs such as Vodafone and AT&T, promising high profit margins. 2. Phase 2. Following the successful deployment of the first constellation, the company plans to launch an additional set of satellites to expand coverage to North America, Europe, and Asia. 3. Phase 3. The final phase aims at achieving full global coverage by deploying further satellites, enhancing the overall capacity and service quality. 4. Phase 4. This phase will introduce advanced technology, including 5G support to the existing satellite networks. Technological validation. AST SpaceMobile has conducted successful tests with earlier prototypes, including BlueWalker 1, and is preparing for the launch of BlueWalker 3, which is expected to validate the technology further. The operational model relies on a phased array of satellites that can establish direct communication with standard mobile devices without the need for special hardware. Market opportunity and financial projections. The market potential for satellite communication is enormous, with estimates suggesting a total addressable market exceeding $1 trillion. AST SpaceMobile's strategy is positioned to capture a significant share of this market by leveraging its unique value proposition. Financial projections are optimistic, with estimates suggesting that AST SpaceMobile could generate substantial revenue streams by 2025. The valuation models indicate potential stock prices ranging from $114 to $514, depending on performance metrics and market conditions. Regulatory environment. Navigating the complex regulatory landscape is crucial for the success of AST SpaceMobile. The company has sought waivers from the FCC to operate within existing spectrum regulations. This challenge is common across the space venture landscape, where startups must secure the necessary licenses to operate legally. Challenges and risks. Despite the optimistic outlook, several challenges persist. Regulatory hurdles. Gaining approval from regulatory bodies can be a lengthy and complicated process, potentially delaying deployment timelines. Technical risks. The technology's success hinges on precise engineering and execution. Any failure during the deployment or operational phases could set back progress significantly. Market competition. The entry of major players like Starlink in partnership with T-Mobile introduces potential competition in the satellite-to-mobile market, necessitating AST SpaceMobile to maintain its competitive edge. Timeline of key events. 2017, initial funding for AST SpaceMobile. 2020, filing for FCC access to U.S. markets and seeking waivers for operations. 2021 Merger with New Providence Acquisition Corp. Becoming a publicly traded entity. 2022 Planned launch of Blue Walker 3 with connectivity tests anticipated. 2023 to 2024 First phase of satellite launches. Aiming for operational service. 2025 Completion of the initial constellation with 20 satellites. Conclusion. AST SpaceMobile's vision to launch 20 satellite constellations by 2025 represents a transformative step toward global connectivity, particularly for underserved populations. As the company navigates the complexities of investment regulation and technological execution, its success could reshape telecommunications on a global scale. The phased approach, significant investment and strategic partnerships position AST SpaceMobile to play a pivotal role in bridging the digital divide and enhancing connectivity for billions. This report reflects the current trajectory and strategic initiatives of AST SpaceMobile as of early 2025, underscoring the interplay between technology, finance, and regulatory environments in the burgeoning space industry. 1. Investment trends and impact of lower launch costs. The content reveals that the North American space sector has seen dramatic increases in venture investment, largely attributed to reductions in launch costs. This points to a counterintuitive reality. While launching satellites was historically expensive and risky, recent advancements have made it economically viable and attractive for startups, contradicting earlier assumptions about the prohibitive nature of space ventures. 2. Emerging startups attracting funding. The emergence of numerous startups in the space sector, such as Relativity Space and Astranis, suggests a flourishing environment. This contrasts with traditional views that space ventures are too niche or risky for substantial investment. The report points out that successful funding rounds for these startups indicate a shift in investor willingness to take risks in the space domain, defying the notion that only established firms can succeed in this industry. 3. Challenges and risks in the space investment landscape. The discussion about high capital intensity and long timelines for space startups contradicts the common perception that tech startups can scale rapidly with less upfront investment. The reality that space ventures often require extensive R&D and face high failure rates paints a more cautious picture, highlighting the complexity and risks involved, which are often underestimated in broader tech investment narratives. For a regulatory environment in North America, the regulatory landscape presents both opportunities and challenges which can be surprising. While many might assume that governmental oversight stifles innovation, the report indicates that the U.S. government is increasingly supportive of commercial space initiatives, creating an environment conducive to growth. This reflects a counterintuitive dynamic where regulation can both facilitate and restrict market entry. 5. Returns on investment. Historical and current ROI trends. The mixed outcomes for space investments challenge the traditional understanding of venture capital returns. While some companies like SpaceX have yielded exceptional returns, many others have seen significant losses. This dichotomy illustrates that the space sector, while potentially lucrative, is fraught with high variability, contradicting the more straightforward, predictable returns often anticipated in tech investments. 6. Future outlook. The next wave with ultra-low launch costs. The anticipated impact of ultra-low-cost launch capabilities, particularly through innovations like SpaceX's Starship, could reshape the entire sector. This suggests a counterintuitive potential for its space economy to emerge more robustly than previously thought possible, as lower costs open new business models that were not feasible before, challenging the belief that space ventures are restricted to traditional aerospace paradigms. 7. Social impact. The narrative around AST SpaceMobile's mission to connect billions of unconnected people provides a compelling counterargument to the notion that space companies operate solely for profit. The emphasis on social impact, including improving access to communication and education in underserved regions, challenges the stereotype of the space industry as indifferent to social issues, revealing a more nuanced perspective on its potential benefits for humanity. 8. Market growth and optimism. The report's assertion that the space sector is poised for growth despite recent downturns counters the prevailing sentiment that economic conditions are solely detrimental. It implies that the long-term outlook remains positive, suggesting that the space economy could thrive even in challenging market conditions, which is a deviation from the usual pessimistic forecasts during periods of economic contraction. These points highlight a variety of counterintuitive findings within the context of the evolving space industry, challenging traditional assumptions about investment viability, regulatory impacts, and the broader implications of space ventures for society and the economy. Overlooked insights in the report on AST SpaceMobile's satellite constellations. 1. Phased approach and long-term vision. While many readers may focus on the sheer ambition of launching 20 private satellite constellations by 2025, the significance of AST SpaceMobile's phased approach often goes unnoticed. This strategy involves a gradual rollout, starting with 20 satellites to serve equatorial regions and progressively expanding to encompass global connectivity. The phased approach allows for technological validation and market testing at each stage, which is critical for minimizing risk and ensuring operational success. Significance: this phased strategy not only mitigates financial risk but also provides the opportunity to adapt and refine technology based on real-world performance and user feedback. This iterative process is crucial in the high-stakes arena of space technology, where initial failures can lead to substantial financial loss and reputational damage. Acknowledging this can lead to a more nuanced understanding of AST SpaceMobile's potential for sustainable growth. 2. Regulatory navigation. The regulatory landscape, particularly in the United States, poses significant hurdles for satellite communications startups. While the report discusses the complexities of obtaining licenses from the FCC, the implications of navigating these regulations can be profound. AST SpaceMobile's strategy to seek waivers to operate within existing spectrum regulations may be underestimated by many. Significance: successfully navigating these regulatory challenges is not just a box-ticking exercise, it can be a decisive factor in the speed and efficiency of deployment. A company that can effectively manage regulatory relationships and compliance can gain a competitive edge, which is especially important in an industry where time to market can dictate success. The ability to proactively address regulatory challenges can enhance investor confidence and lead to better funding opportunities. 3. Market potential and social impact. The report highlights the market's total addressable size exceeding $1 trillion, but it often overlooks the profound social impact of providing connectivity to the 3.2 billion people currently without internet access. The narrative of digital inclusion is compelling, suggesting that AST SpaceMobile's technology could significantly improve economic opportunities and social equity in underserved regions. Significance: the social aspect of AST SpaceMobile's mission could attract investors focused on environmental, social, and governance (ESG) criteria, which is increasingly relevant in today's investing landscape. Companies that can articulate their social value proposition may find it easier to secure funding and support from socially responsible investors. Understanding this could provide a competitive advantage in attracting a broader base of investment. 4. Technological validation through prototypes. The report mentions the successful testing of earlier prototypes like BlueWalker 1. Yet the broader implications of these technological validations are frequently understated. The upcoming launch of BlueWalker 3 is not merely a technological step but a crucial milestone that will validate the entire communication architecture AST SpaceMobile is proposing. Significance: the successful deployment and functionality of these prototypes serve as proof points for potential investors and partners. Demonstrating that the technology can work in a real-world environment alleviates some concerns about the feasibility of the more extensive constellation plans. This validation is essential for building trust with stakeholders and can lead to increased investment as confidence in the technology grows. 5. Revenue sharing agreements with mobile operators. The report outlines AST SpaceMobile's model of revenue sharing with established mobile network operators like Vodafone and AT&T, but the implications of such partnerships may not be fully appreciated. by leveraging the existing infrastructure and customer bases of these operators. AST SpaceMobile can effectively minimize its customer acquisition costs and operational complexities. Significance: this model not only enhances the scalability of AST SpaceMobile's operations but also provides a safety net during the initial launch phases. By sharing revenue with established players, AST SpaceMobile can reduce the financial burden of marketing and customer support, allowing it to focus resources on technological development and deployment. The strategic nature of these partnerships can be a significant advantage in an industry that requires rapid scaling. 6. Financial projections and valuation models. While the report provides optimistic financial projections, the assumptions behind these numbers warrant critical examination. The report suggests stock prices could range from $114 to $514 by 2030, but these projections are contingent on various performance metrics that may not materialize as planned. Significance: investors should be cautious of overly optimistic projections based on future performance that is not guaranteed. A more conservative approach to valuation. Considering potential delays and regulatory challenges could provide a more realistic framework for understanding the risks involved. By critically analyzing these valuations, investors can better position themselves for potential volatility in stock performance. 7. Competition and market dynamics. The landscape of competitors, including Link and T-Mobile's partnership with Starlink, is outlined in the report, yet the strategic implications of this competition often go unexamined. The emergence of competitors could lead to market fragmentation and pressure on pricing strategies. Significance: recognizing the competitive dynamics is vital for long-term strategic planning. AST SpaceMobile must continuously innovate and adapt to maintain its market position. Understanding how competition can shape market behavior will be crucial for forecasting future performance and ensuring sustained growth. Conclusion. In summary, several nuanced insights within the report on AST SpaceMobile's launch strategy and market approach may be overlooked by many readers. From the significance of a phased rollout to the implications of regulatory navigation and social impact, these elements are crucial for understanding the potential of AST SpaceMobile to reshape global connectivity. Investors who appreciate these subtleties will be better equipped to navigate the complexities of investing in this pioneering venture. 1. Investment landscape and economic potential. The North American space sector has experienced a massive surge in venture investment, which rose from a few $100 million in the early 2010s to approximately $12 to $15 billion in 2021. This boom is driven by plummeting launch costs, which have fallen over 90% thanks to advancements like reusable rockets. These economic shifts have enabled new startups like AST SpaceMobile to emerge, targeting a significant market opportunity in satellite communications, estimated to exceed $1 trillion. By providing connectivity to the 3.2 billion people currently without internet access, AST aims to tap into a lucrative market while addressing a critical global need. 2. AST SpaceMobile's phased approach. AST SpaceMobile's strategy involves a phased rollout of 20 private satellite constellations by 2025, underpinned by a $500 million investment in research and development, manufacturing, and deployment. The first phase targets equatorial regions, aiming to offer connectivity to 1.6 billion people by 2024. The operational model, which includes revenue-sharing agreements with established mobile network operators like Vodafone and AT&T, is designed to ensure high profit margins, potentially reaching up to 99%. This approach not only secures immediate access to a vast customer base but also minimizes the financial risks associated with customer acquisition. 3. Technological validation and competitive edge. AST SpaceMobile has achieved significant milestones in validating its technology, including successful tests with prototypes like BlueWalker 1. The upcoming BlueWalker 3 launch is anticipated to be pivotal for commercial validation. The company's unique proposition lies in transforming standard smartphones into satellite phones, facilitating seamless connectivity without additional hardware costs for users. This contrasts sharply with competitors like Link and Starlink, which rely on specialized equipment. Additionally, AST holds over 2,400 patents, providing a competitive edge in the satellite communication space. 4. Regulatory environment and challenges. Navigating the complex regulatory landscape is crucial for AST SpaceMobile's success. The company must secure FCC licensing and spectrum approval, facing opposition from established telecommunications giants concerned about potential signal interference. However, AST's partnerships with major mobile operators could enhance its lobbying power and facilitate smoother regulatory approvals. The future success of AST SpaceMobile hinges not only on technological and operational execution but also on its ability to navigate regulatory hurdles and secure necessary licenses in various jurisdictions, particularly in equatorial regions where it plans to launch its initial constellation. In summary, AST SpaceMobile's ambitious plan encapsulates a convergence of technological innovation, strategic partnerships, and an acute awareness of regulatory challenges, all of which are essential for addressing global connectivity gaps and capitalizing on a burgeoning market. Here are 3 famous historical cases that share similarities with the ambitious technological initiative of launching private satellite constellations, particularly in terms of scale, innovation, and the challenges faced. 1. Iridium Satellite LLC, 1990s. Iridium was one of the first attempts to create a satellite constellation for global mobile communication. Launched in the 1990s, it aimed to provide worldwide voice and data communication via satellite phones, especially in remote areas lacking terrestrial cell coverage. Iridium's constellation consisted of 66 low Earth orbit satellites, and it was designed to ensure global coverage. However, the project faced significant challenges, including high costs, approximately $5 billion to build the constellation, a lack of market demand, and competition from terrestrial mobile networks. After launching in 1998, Iridium declared bankruptcy in 1999 due to its inability to attract enough subscribers to cover its operational costs. The system was eventually revived for specialized uses, but the initial venture exemplifies the risk and complexity of satellite communications during its time. 2. Teledesic, 1990s. Founded by Bill Gates and Craig McCaw, Teledesic aimed to create a satellite constellation that would provide high-speed internet access globally, particularly to underserved regions. The project proposed deploying a constellation of over 300 satellites in low Earth orbit to deliver broadband services. However, Teledesic faced similar issues to Iridium, including exorbitant costs, technological challenges, and the rapidly changing telecommunications landscape, including the rise of terrestrial broadband. Ultimately, Teledesic was unable to realize its vision and the project was abandoned in the early 2000s. The ambition to connect the world through satellite technology was ahead of its time, and while the vision remains relevant, execution proved difficult. 3. Globalstar, 1990s, present. Globalstar is another satellite communications company that launched its constellation in the late 1990s, similar to Iridium. Initially intended to provide global voice and data services, Globalstar faced various operational challenges, including technical issues with the satellites and competition from terrestrial cellular networks. Although it filed for bankruptcy in 2002, Globalstar has since restructured and continues to operate, now focusing on niche markets such as satellite tracking and IoT services. The company's journey illustrates the struggles and adaptations necessary in the satellite communications sector, highlighting the importance of market demand and strategic pivots in response to competition. These historical cases demonstrate the complexities, investment requirements, and challenges faced by companies attempting to establish satellite communication networks, echoing the ambitious plans of AST SpaceMobile and the current landscape of satellite technology initiatives. The future outlook for AST SpaceMobile, aiming to launch 20 private satellite constellations by 2025 with a $500 million investment, is promising given the current trends in the space industry. Here are several key predictions and insights regarding this initiative. 1. Market demand and expansion. By 2025, AST SpaceMobile is set to address the connectivity needs of approximately 3.2 billion people who currently lack internet access. The projected increase in global smartphone usage, especially in regions with low connectivity, is expected to drive demand for affordable mobile services. As smartphone penetration continues to rise, AST's model of transforming existing phones into satellite phones will likely attract considerable interest from both consumers and mobile network operators (MNOs). 2. Technological advances. As the technology behind satellite communications matures, AST SpaceMobile's planned satellites are expected to leverage advancements in satellite design and manufacturing, including cost-effective production methods and enhanced communication capabilities. The successful launch and operation of prototype satellites such as Blue Walker 3 will serve as a validation point, potentially accelerating deployment timelines and boosting investor confidence. 3. Regulatory landscape. Navigating the complex regulatory environment will be crucial for AST SpaceMobile. The company's strategy to seek waivers for transmitting signals from space on terrestrial frequencies could face challenges. However, the increasing recognition of the need for global connectivity may drive regulators to support initiatives that bridge the digital divide. If AST successfully obtains the necessary regulatory approvals, it could serve as a model for future satellite communication initiatives. 4. Investment trends. The space venture capital ecosystem is evolving with a surge in investments driven by lower launch costs and heightened interest in satellite-based services. The anticipated rebound in funding post-2023 following a period of contraction could benefit AST SpaceMobile as it seeks additional capital for future phases of satellite deployment. The company's partnerships with established MNOs like Vodafone and AT&T enhance its credibility and could lead to lucrative revenue-sharing agreements. 5. Competition and market position. While competition from emerging players like Link and the recently announced T-Mobile Starlink partnership is expected, AST SpaceMobile's first-mover advantage and exclusive partnerships position it favorably within the market. As the satellite-to-cellular service model gains traction, AST's ability to provide seamless connectivity with existing mobile phones will differentiate it from competitors that rely on specialized hardware. 6. Financial projections. Financial projections suggest robust revenue growth potential. By 2030, AST SpaceMobile could achieve significant revenue milestones, capturing a substantial share of the projected $1 trillion global market for mobile services. The unique 50-50 revenue-sharing model with MNOs combined with high profit margins could lead to impressive EBITDA figures, making it an attractive prospect for investors. 7. Global connectivity initiatives. The push for universal connectivity aligns with broader global initiatives aimed at reducing inequality and enhancing economic opportunities. AST SpaceMobile's mission to connect underserved populations is likely to garner support from governmental and non-governmental organizations, potentially leading to additional funding and partnerships that further bolster its market position. 8. Long-term vision. Looking beyond 2025, AST SpaceMobile's expansion plans into other regions including North America and Europe phases 2 and 3 could see it establish a more global presence. The long-term vision includes scaling its operations to cover an estimated 620 million subscribers by 2030, thus solidifying its role as a leader in the satellite communication space. Conclusion. In summary, AST SpaceMobile is positioned at the convergence of technological innovation and market demand for global connectivity. While challenges exist, particularly in regulatory navigation and competition, the potential for growth driven by a unique business model and strategic partnerships presents an optimistic future outlook for the company. As the space industry continues to evolve, AST SpaceMobile may well emerge as a pivotal player in transforming how millions access essential communication services.